Welcome to the stock analysis of Marksans Pharma Limited. Today, we're diving deep into this leading player in the pharmaceuticals industry. We'll cover their business segments, financials, management outlook, and key strengths and weaknesses. Ready to learn more? Let's get started. Before we begin, a quick introduction to PA Wealth. We're an investment services group offering stocks, PMS, mutual funds, alternative investment funds, insurance, and startup investments. We upload research videos on different companies, mutual funds, and financial topics every week. Subscribe to our channel and hit the bell icon to stay updated on the latest market trends and potential multi-bagger stocks. Now, let's start with an overview of Marksans Pharma Limited. Marksans Pharma Limited, incorporated in 2001, is engaged in the business of formulation of pharmaceutical products. Headquartered in Mumbai, the company is actively operating in over 50 countries worldwide. Their key focus areas lie in the OTC and prescription drugs that have wide-ranging applications across fields like cough and cold, digestives, oncology, gastroenterology, anti-diabetic, antibiotics, cardiovascular, pain management, gynecology, among others. Now, let's break down the business segments. First, consumer self-care products, OTC. In the OTC business, Marksans manufactures store brands or private label manufacturing for retailers or customers, and manufactures OTC products through its own label as well. They develop pharmaceutical formulations for pain management, upper respiratory conditions, digestion, micronutrients, and skin care. Second, prescription, RX. In this segment, the company develops pharmaceutical solutions that address the diverse needs of individuals with cardiovascular conditions, neurological disorders, mental health conditions, cancer, diabetes, etc. Their portfolio includes state-of-the-art medications designed to support heart health, manage blood pressure, bacterial infections, among others. Let's now break down the revenue segments of Marksans Pharma for Q1 of financial year 2025. The OTC segment is the largest contributor, making up 74.10% of the total revenue. Lastly, prescription segment make up the rest 25.90% of the revenue. Let's now take a look at the geography-wise revenue of Marksans Pharma for Q1 of financial year 2025. The UK and Europe region are the largest contributor, making up 42.50% of the total revenue. The USA and North America region contributed 42.58% of the total revenue. The Australia and New Zealand region contributed 11.10%. Lastly, rest of the world make up the rest 3.82% of the revenue. Now, let's look at the management of Marksans Pharma. Mr. Mark Saldanha is the chairman and managing director of Marksans Pharma Limited. He is a science graduate with more than 2 decades of experience across business and technical functions. Mark Saldanha is well versed with overall management of the company and possesses hands-on experience in marketing, production and finance. Mrs. Sandra Saldanha is a whole-time director of Marksans Pharma Limited. She has a master degree in arts. Mrs. Saldanha has a vast experience in the field of human resource management, business development, projects and supply chain management. Vardhaman V. Jain is the executive director of Marksans Pharma Limited. He has 27 years of experience in manufacturing, quality R&D, compliance and regulatory affairs both for API and FDF manufacturing. Mr. Jain has done his masters in pharmaceuticals. Let's now look at the shareholding of Marksans Pharma as of June 2024. Promoters holds the highest share of the company, which is 43.87%. Public hold 33.79%. Mutual funds hold 2.81%. Foreign institutional investors hold 10.88%. Other institutions collectively hold 8.65%. Let's now review the Marksans Pharma financial performance over the years. The company's revenue has grown at a CAGR of 10.57% over the past 10 years from 797 crore rupees in financial year 2015 to 2,177 crore rupees in financial year 2024. The company's PAT has grown from 112 crore rupees in financial year 2015 to 315 crore rupees in financial year 2024 at a CAGR of 10.89%. And, the company's return on equity has decreased from 30.50% in financial year 2015 to 15.20% in financial year 2024. Let's now turn to the management commentaries to get a better understanding of the company's performance. Marksans Pharma has significantly expanded its presence in the US market by acquiring TimeCap Labs, a facility specializing in the manufacture of solid-dose generic pharmaceutical products. The formulation businesses in the UK and European market grew by 22.9% year-on-year to 943 crore rupees, recording a CAGR of 16.1% over the financial year 2017 to 2024. The gross margin for Q1 of financial year 2025 expanded by 432 basis points year-on-year and 386 basis points quarter-on-quarter, primarily due to the reduced raw material pricing and the depletion of old high-cost inventory. EBITDA for Q1 of financial year 2025 was 128.4 crore rupees, an increase of 26% year-on-year and an increase of 17.1% on a quarter-on-quarter basis. The EBITDA margin for the quarter was 21.7%. The Teva Farm facility will probably start contributing to the revenue in the Q3 of financial year 2025. In Q1 of financial year 2025, the Teva plant contributed 60 crore rupees. The company is expecting 500 rupees to 600 crore rupees of revenue in financial year 2025 from the Teva Farm facility. The company aims reach 3,000 crore rupees of revenue within the next 2 years and is expecting 10 to 12% growth happening in the European and UK region in the upcoming quarters. The company plans to add 34 new filings over the next 3 years in UK and 32 products for the USA market. The company aims to double its revenue in the US and North America region and reaching the top 5 private label OTC companies in the region. For the Teva Farm facility, the aim is to scale the manufacturing facility to 8 billion units per annum in 3 phases. The Phase 2 expansion to 6 billion units per annum will be completed by the end of financial year 2025. The capex incurred during the financial year 2024 was 208 crore rupees. The capex mix comprised of 125 crore rupees in Teva Farm facility, 30 crore rupees in existing Goa facility, 31 crore rupees in the US facility, 22 rupees COS in the UK facility, and 34.6 crore rupees in the R&D, representing 1.6% of the sales. Now, let's discuss the strengths and weaknesses of the company. First, strengths. Experienced and qualified management with established track record of operations. MPL is into manufacturing pharmaceutical formulations for over 3 decades and has been able to establish good relationship with its customers and suppliers. The company's promoters have over 3 decades of experience in the pharmaceutical industry. Diversified geographical presence. The company sells its product portfolio internationally in over 50 countries, with majority revenue generated from regulated markets. Geographically diversified nature of revenue reduces the company's exposure towards adverse economic slowdown in a single geography. Now, weaknesses. Intense competition and exposure to regulatory risk. The company faces intense competition in international markets. Increasing regulations and heightened sensitivity to product performance pose key challenges in the pharmaceutical industry. Segment concentration risk with major presence in OTC segment. The company is actively pursuing diversification in its therapeutic segments. However, the pain management segment is likely to remain the major contributor to total sales in the near term, reflecting segment concentration risk. MPL is mainly present in OTC segment, which is highly competitive and price sensitive. And that wraps up today's analysis. If you found this video insightful, give it a thumbs up and subscribe for more research-based financial content. Don't forget to click the bell icon for alerts on potential multi-bagger stocks. Got a topic you want us to cover? Drop it in the comments below. Thanks for watching, and we'll see you in the next video.